Hey, I am joined today with Dylan Bird with RPM Mortgage, and we are going to be talking a little bit more about what he does and how a mortgage lender will help you in the home buying experience.
Will, thank you so much for having me. I appreciate being here.
Yeah, it's great having you here. So tell me a little bit more about yourself and what you do.
Absolutely. One of the first steps to buying a home, even just preparing for a home purchase and what that looks like is really chatting with, someone like me who's a mortgage specialist that would be able to help identify what's in alignment with your financial goals. Right. Having someone that is dependable and available and very knowledgeable is really going to help set you up for success.
I totally agree. And I guess in terms of this whole thing, I'm a little curious about like how do you even get started? Like, is it something where once you talk to a lender, you're kind of stuck with them, or like how? Tell me a little bit more about that like onboarding process that you do.
Good question. Yeah, the benefit of that is that there is a plethora of flexibility. Really, obtaining a mortgage pre-approval, it's a crucial step, in purchasing a home and really just preparing for a home purchase. And, really only takes a few minutes to chat with someone like me and to work through that process. And really, you have the flexibility to work with whoever you want to work with. Right. So I want to make sure that if we have a conversation that you're a good fit for me and I'm a good fit for you. But again, there's really no commitment, no obligation at all once you're in a contract on a house, then you really want to make sure you know exactly who you're working with. And
Yeah.
that is really what that looks like when you're making a transaction for a home.
Yeah, I totally agree. And something that you can't do, well, it is possible, but is extremely difficult, is to change lenders in between from the time you start a contract or get an offer accepted to the time you close. If it happens, it's probably going to be a little rough. So that's why I always like to say, like, find that lender, which Dylan's a fantastic lender, and there's a reason why I'm having a video with you right now. Find that lender that will work for you. And it's one of those things where, I mean, as you probably know and understand, there's a lot of products out there essentially for loans and different interest rates and things of that nature. It's really going to be the person behind that. And that's why I like Dylan, is because he's a local lender. And I guess in that steps, so first we kind of went over the initial thing, but like what are those next steps that once you do get that pre-approval letter?
Yeah. Starting early, is so extremely beneficial, right? Knowledge is power. Again, making sure you're working with the right person, that they have access to the products that you're looking for based on your unique situation, and while working through that pre-approval process, again, working with a rock star realtor like William here, is really going to help position you exactly to where you want to be, right? Finding the people that can meet your needs and your values and really help you find that right home with the best deal by implementing strong negotiation skills, and a lot of knowledge in the market. So really, once you make it through the pre-approval process, which is just verifying income, credit, and assets, that's all it takes, right? That's when the fun part begins, when you can go out with Will and, begin to view homes that you can envision you and your family living in.
Yeah. That's one of those things like I usually don't even start showing homes to people because if they don't have a pre-approval letter, because it's kind of like going window shopping. You get really excited about a particular house and then you're like, yeah, but you're not pre-approved, so we can't really even offer, like anything we do offer is going to not look very substantial.
And there's a lot of rules and regulations and guidelines that change in this industry. And the difference between a consumer perspective versus the lending perspective tends to be quite different in regards to what people think they can afford or what their income actually looks like, if there's bonus or overtime or commission or a type of income that's variable. So it's really good to speak with a lender so that you can understand the lending perspective and what you're actually pre-approved for, and on top of that, not just what you're pre-approved for, but really what you're comfortable with as a monthly budget. You might be pre-approved for 600,000, but really for you and your lifestyle, the way you want to live your life, maybe you want to find a house that's 4 to 500,000, right? So really being able to put together and implement a game plan that's in alignment with your values is exactly what I would be doing for you.
Yeah. And that's one of those things where personally I'm going towards that, like the financial independence movement where like you don't need to be buying the most expensive house. You need to find something that you can actually live in. And let's say that there is some sort of recession or there's something where you lose your job, like you shouldn't have to be worrying about the mortgage part of that. And that's one thing that I love about you, Dylan, is that you have that conversation because a lot of lenders, or some, I'm not sure how many, but a lot of them I feel like don't have that conversation of like, this is really how much you feel comfortable affording. And again, like you can go to any lender, they can pre-approve you for 1,000 or sorry, 100,000 over what you're actually going to be able to maintain for a mortgage payment.
Yeah.
And it's one of those things where it just like for me, I never want to put anyone that I know in that position where they're really worried about having to pay the freaking mortgage and then worry about the place they live in. Part of the reason why I got in all this. But I guess one of the things I'm a little curious about is in terms of what other qualities kind of differentiate the average lender versus a great lender.
Absolutely. Good question. I think you're just touching on it right there. And this is the biggest reason why it's an absolute joy to work with you, Will, is we both prioritize our clients and their needs over the transaction itself. Right. And that right there tends to be a huge competitive edge, when finding someone that you want to work with is you can have a conversation, with multiple realtors, multiple lenders, whatever. And oftentimes what you'll find is that many are very transactional, pretty cut and dry, and, it's really hard to get a hold of a lot of people with that personal touch and availability and really being dependable. So, in working with me and working with you, right, we're available, we're accessible, and we're really aware of the best options, right? Best options towards different types of properties, best options towards, loan programs that are available. And really what we're all looking for is, the best price, the best product, and the best service. And working with you and I, all three of those are check, check, and check.
Yeah. With that, you bring up a great point. I think there's some people who like look at Chase, for example, and like other big banks. Could you tell me a little bit more of the difference between a mortgage broker versus a mortgage originator, if that makes sense?
Yeah, yeah, it completely makes sense. So the difference between the two, many loan originators just have access to their in-house products. And so they originate loans, themselves through their in-house company, which is great and can be a really awesome program. But when you're working with a broker, I'm able to broker loans and also originate loans. So the difference between that, when I broker, it's for different type of programs that could be advantageous for an individual buyer or for a family or household. When you broker, you're going to a credit union, or you're going to, I broker out to different big banks, right? So big banks or credit unions or private investors, oftentimes they have really competitive rates and advantages when it comes to unique situations. So having the ability to broker out or the ability to originate in-house as well, both have their own unique edge. Keeping things in-house is awesome when the availability is there, because we underwrite everything in-house. We're all keeping it under the same roof. When you're going through the transaction, I can speak to my processor or my underwriter or my doc drawing team, in the same building, which just creates a lot of ease and efficiency for a smooth transaction.
Okay. And in terms of like a product, like I feel like this is a fairly foreign concept. Like as a 5-year-old, I'm like a product for a financial thing. Like what like tell me a little bit more about like different products and or
Yeah.
like how to frankly just think about like how lenders have different products. Because to me it just I don't know when I initially did it, I just like I'm not it's not clicking for me.
Oh my gosh, totally, right? That word product or program or options kind of get tossed around a little bit. You're like, what do you mean? I just want a loan, right? Aren't they all the same? I just
Exactly.
need a loan here. Someone help me with home financing, right? So the home financing, right? There are many different types of programs or options or products available. And what that has to do, for the most part, there's just a few different buckets. You might have heard the word FHA loan tossed around, or a conventional or jumbo loan, or USDA loan, or a VA loan. And really the list kind of goes on and on. But really what it is each of those programs has a difference in down payment options, and flexibility in regards to your debt to income ratios, as well offering really competitive options for people that are self-employed. That tends to be another big thing is if you're self-employed, your income is calculated much differently than that of someone who's W-2 salaried, right? So these different programs can really be customized to help you be very flexible with your home purchase in regards to, again, your debts, your income, your credit score, down payment options, or even closing cost assistance is something that me and my company help with as well for a lot of our first time home buyers. So speaking with me, I'll be able to educate and put together a customized purchase plan that we can break down, on the computer, and I can actually send you a link and we can review those different options side by side together. So we compare and contrast what option or program makes most sense for you.
I get this question a lot, and I think that when you're like kind of thinking about, okay, should I even buy a house? I'm a little curious about what your thoughts on like when someone should maybe keep on renting versus when someone would buy the house. Because this is one of those things where as a realtor, it's great to be like, yeah, you should buy a house. But in reality, like if it's not something that fits your lifestyle, I'm not going to push you to buy a house. But from a mortgage standpoint, I'm a little curious about kind of like when would it be a good idea to rent versus buy a house?
Yeah, such a good question. Should I buy or should I rent? Whatever that is, right? Well, to start, really, a mortgage cost is going to stay the same on a 30-year fixed loan or a 15-year fixed loan. Whereas on the other hand, rents rise,
Yep.
right? So
They
that
do.
itself, right, kind of speaks for itself, and if you get a fixed mortgage on a home purchase, that mortgage payment's never going to change. Again, on the other hand, when you rent, you risk that cost going up each year. So really being a home buyer creates a lot of budget stability, right?
Yeah,
And
totally.
not to mention, it's like having a forced savings account,
Yeah.
right? When you purchase a home, right? You're growing equity and value into a house.
Yeah, that's true. And that's one of those things where if you think about it, when you rent, you are actually paying someone else's mortgage. You're paying them to essentially get that equity. And that's where, like, for me, that's why I really think that buying a home is an investment. Yes, it is a great place to stay. I guess the only times when I'm like, you probably shouldn't buy is when you don't, frankly, can't afford it, in the sense of like, if you're already strapped for cash and you're pushing yourself so hard, that's where obviously maybe it's you buy a condo or maybe lower those sites and then build that equity over time to then buy something else. Uh,
Absolutely. Yeah, just like you were saying, owning a home is a form of investment, and it's a form that many people understand more than, buying stocks or indexes or commodities, because you get the tangible daily lifestyle benefit of actually living in that home while it appreciates, while you're growing equity, by making that monthly payment, or, even renting it out, right? So you have someone else literally paying you for your mortgage. So all of those are really huge advantages in owning a own home. And really, owning a home, just like you were saying, it's when people say like when's a good time, or if they can afford it, it's really a good time whenever it's a good time for you, right? So there's no need to put that pressure on yourself if you're not financially in a place to own a home. But that's why working with someone like you and with me, right, we can help them paint a picture of what it visibly looks like to see if it's a viable option.
yeah, and that's one of the things that I love about you, Dylan, is in the sense that education is my thing. Like that's kind of the want to give as much information as possible. I feel like a lot of real estate is like just like, hey, just don't know anything about this. Trust these people with probably I think the most biggest or the biggest purchase of your life. Like you're buying a car, yeah, that's anywhere between, if depending on who you are and what your pay scale is, anywhere between 15 to maybe at max 60 grand. Houses nowadays, at least some of the houses I've seen are at half a million, and even if you're starting, it's like 350.
Yeah, that 50 to $60,000 for a car is your down payment on a house, right? That's just to get
Exactly.
you into a house. But
Yeah.
again, being a first-time home buyer, there's a lot of flexible options depending upon your situation, where you can do 0% down or 3% down, right? Making it very flexible and affordable to get into a home.
Yeah. I agree. And then in terms of, obviously we're still in the middle of the pandemic, but I'm a little curious about what your thoughts are on the market and kind of how things have changed, or if like what your thoughts on how to be competitive and if not.
Yeah.
Yeah.
Yeah, it's quite interesting, how COVID has impacted our local market. As a response initially, in 2019 in March, I mean, the very first thing that happened is mortgage rates just dropped, significantly, making it very, very cost efficient, to get a fixed loan. What happened is that a lot of investors refocused their attention. And when I say investors, I mean mortgage backed investors. Okay, that's a bond market. Okay, the stocks and bonds. This is a bond market. All right. And so when investors focused their attention to the bond market to protect their money in place of investing in companies with stocks, this led to mortgage rates decreasing significantly, right, to more than what they've been in the past decade. Right. This is actually historically all-time low, and we are still in the all-time low range. Additionally, in response to significantly low interest rates, the economy, as it was changing and morphing, and jobs were changing, and the amount of new jobs and new home builds were changing, lenders did tighten their mortgage requirements from the pandemic. But since, the past year and a half has gone by, things have loosened back up. We're really exactly where we used to be in terms of having a lot of flexibility on the different loan programs that are available to people. So really, if you're looking for obtaining a mortgage during this time of pandemic, it's really exactly what it used to be back in the day, in regards to having standard guidelines and a lot of flexibility towards down payment options.
Is it something, so obviously when rates drop, I'm a little curious about like your buying power in terms of like, let's say that you could afford at the time before rates dropped $350,000 home, like how much more points wise or like amount wise would you be able to afford now if you were only in that 350 range?
Absolutely, yeah. Depending upon the different loan program that you were looking into, and depending upon your income that you have right now, I mean, a difference, just to put it into perspective, if the interest rate was to change, by, let's just say, half a point, and maybe that's saving you $100 a month on your mortgage payment,
Just a lot.
every $100 that you save in your mortgage payment actually allows you to qualify for an extra $20,000 in a loan. So if you were pre-approved for 350,000 in your example, and
Mm,
now with the change in rates, let's say that you're saving $100 a month based on the lower rate, really you can actually qualify for an extra 20,000.
wow.
To break that down a little more, yeah, the term, the idea I usually think about is every $50 in mortgage payment that you save allows you 10,000 more in purchase power.
Okay. Huh. So that really shifts you to like maybe from the 350, you're able to afford that much more, like maybe in the 400s to 500 range in terms of price. Or I'm just trying to like make a comparison jump. Like obviously when rates go down, you can just buy more, essentially buy more home for cheaper.
Yeah, exactly. Yeah, your mortgage payment is going to be less, so it gives you more purchase power, and also it just gives you more peace of mind knowing that you are going to be making less interest over the life of the loan, allowing more money to go into the principal, which is right into the equity and the value of your house directly.
Okay, that makes a lot of sense. One of the things, like obviously it's great that the interest rates are super low, but they vary day to day. What do you tell clients when they're like, "Oh no, it just went up like an eighth of a point," and
Absolutely.
like,
Yeah. Thinking, honestly, when it comes down to it, regardless, we're in historical lows, right? So whether or not it's a fraction of a percentage difference, it really is quite insignificant over the long term. And when it comes down to it, you can never time the market with a house, right? The house comes first. Okay, the house absolutely comes first. When you find the home that you feel called to, that you envision, living in yourself or laying down roots to grow a family, I mean, that is more important than the difference of a fraction of an interest rate on a loan, right? Plus, many people don't keep a home for 30 years. You're going to refinance it, or you're going to sell it, or you're going to take a cash out against it. Whatever it is, all those things, regardless of what your interest rate is, it kind of gets reset whenever you make those changes on the home. So
Mhm.
really, it's one of those things where you just got to do what feels best to you in regards to where you want to land and what space you want to be yours. So that's usually kind of the spin that I put on it.
Yeah, and I mean, for the most part, it's not like you're trying to flip the house. You like most of the time, like if you are trying to flip the house, then you're obviously dealing with a whole different level of time frame. But for like the first time home buyer, you're
Yeah.
probably going to be in there for at least 5 to 7 years, and that means your mortgage is really not changing for the next 5 to 7 years.
Right.
Think of the amount of equity you get. Like in this past year, I think it's been absolutely insane in terms of appreciation. And mind you, that this is not normal, and I hope it actually cools off soon because it's just caused a lot of stress in terms of buyers.
It's been hectic, and actually an interesting fact, from the NAR, National Association of Realtors, they came out with a report that showed that appreciation year over year for the past 12 months in the Pacific Northwest region, we have gone up in appreciation by 14%, which is a 12-year high.
Yeah.
12-year high from the previous like 11%, what used to be like the highest appreciation in a whole year. So the fact that we blew that out of the water is absolutely wild, and really just goes to show the investment opportunity that does exist in a home purchase. And while this is a bit of an anomaly, it is expected to be quite high next year and the year after. And the average appreciation tends to be like 5 to 6%, which is still an exceptional amount of return on a six-figure investment.
Yeah, and I agree. And that's just one of those things where like you're just in a sense appreciation even on it like a maybe normal 30-year time span in the past 30 years is anywhere between 5 to 7% depending on the area you are in.
Yeah.
But even then, like if you kind of look in the I think Portland in general is 18.2% ish. It's hovering between 17 to 18.2% for appreciation. That means every month you don't buy a house, you're losing potentially around $7,000. And that's when you're like looking at the points and you're like, oh, if I even hold off for another month and I don't get another thing under contract, like that's probably definitely much more than the like eighth of a point you're gonna lose. So
Really puts it into perspective, doesn't it?
yeah. That's the hardest thing, especially when you're down in the trenches and you're like just kind of like being frugal. Is the best way of saying it because
Yeah.
that's definitely something that I do. You just have to kind of look at that bigger picture. Was there any other thoughts or anything else that you wanted to kind of go over before we wrapped up?
Yeah, I think, we touched base on a lot of good topics. Absolutely. I think the only thing that really comes to mind, is, the thought of, does my lender and does my realtor work together? And should they work together, or how do they work together? And, as you can see, yes, William and I work together, in harmony, right? And not all of us do. Okay, not all realtors and mortgage brokers are going to work together smoothly. Okay, they're forced to eventually once you're in contract, right? But
Yeah.
really, you want to have rapport and relationship, and it's ideal when we know, like, and trust each other to make this an efficient process, right? Having a strong connection between your lender and realtor as they communicate clearly and frequently with one another, helping you feel peace of mind. It's an absolute must.
Yeah, I totally agree with that. In terms of like if you go with the bigger banks with Quicken Loans, yes, they have the product that is going to be probably the very low interest rate and all of these like other great things, and that's great. But if I can't talk to them and it's really hard to get a hold of them to get a pre-approval letter, then it becomes extremely hard for me to like make sure that the you stay in contract and you actually get that home, especially if anything comes up with underwriting. That's when like when you're thinking about building this team essentially, like the lender, realtor,
Yeah.
and just everything that kind of goes along with that. It's one of those things where you want to have a good team that works together because you've probably been on teams where there's no good teamwork and it causes things that could have been fixed to not be fixed and cause major issues. So
Absolutely, and sometimes, it leads to a failed transaction, right? And when a transaction fails, I mean, it's devastating, right? The client feels let down, they're out of pocket a good amount of money, right? Depending upon how far you've made it, through inspections and appraisal, you could be out a few hundred to a few thousand. Right. So not only are you buying, a loan and the service that comes with that, but there's so many factors in this industry based on economic events, right? You're also buying the execution and a successful closing of your home,
Yeah.
right?
And just so one of those things that it depends kind of on the situation, but sometimes I've heard some horror stories where, like, let's say that the lender doesn't close on the right date. Every day you don't close, which means that you complete the transaction, you get your keys. Every day you don't close, you could potentially be losing $200 to $500 a day. So it's really critical to be like, oh, if there's an issue, then we fix it now, and not have to pay the seller that fee every single day just to make sure that you complete that transaction. Like
Yeah,
again,
yeah, yeah.
what's the
There's a
massive thing?
lot of lenders out there. There's a lot of realtors out there. Some are excellent, some are not, unfortunately. And the great ones distinguish themselves very clearly with the ability of having genuine care and being knowledgeable and being reliable. And that's exactly what William and I are here to do.
Is there anything else you want to add on to that, or I feel
No,
like
I
I've
think,
said everything.
yeah, no, I think we touched all of it. Really the goal of having a great lender and an awesome realtor, is to help you understand all the factors at play and really help evaluate the best loan options and home purchased scenarios that really fit your lifestyle. We'll ask the right questions to really get to know you, make sure that we're able to help you get to exactly where it is you want to be.
Yeah, I totally agree. Well, Dylan, tell me a little bit more about how someone can find you, reach you, and I'll make sure to like add in contact information either below, up above, somewhere. But tell us where we can find you.
7 days a week, before and after hours. Weekends are great too. I know a lot of people are available on the weekends more than the weekdays. We all work, we all got a job, we have family life, kids. You can reach me, my cell phone, call, or text is wonderful, or by email as well. And I'm sure we'll have that linked in the descriptions somewhere in here. And my phone number is 503-477-0110 is definitely the best way to get a hold of me.
Okay, awesome. Well, thank you very much for your time. I appreciate it, and we will hopefully see you back on to explain a bunch of the terms and get to know you a little bit better.
There's a lot of terminology and vocabulary, and I'm excited to share that.
Alrighty, bye.
So much gratitude. Thank you, Will.